Hi everyone, ladies and gentlemen. Welcome to Money Made Easy with the Invest IQ. How are you doing today? In this video, I'm going to show you how I made 100% returns on my tax-free savings account here in Canada. Yes, 100% returns. I've only been here for less than 3 years. That's right. So you too can do it. I also want to put it out there that I've been investing before I came to Canada. So yes, you can say I have a little bit of experience before I came to Canada. I hope to even make more returns in the coming months, and I'm going to show you some of the discipline that you need to imbibe in order to make great returns from your investments, right? For those of you who are not yet in Canada, this video you might also find very interesting. If you're planning to come to Canada anytime soon, it's even better you learn these things before you come to Canada, because investing in Canada is a big deal. It's a big deal. You don't want to come without the knowledge, all right? So without wasting much time, we're going to get right into it. I'm going to share a slide with you guys real quick. If you can see the slide, I'd like you to type in the comment section. And hey, if you're seeing me for the first time, my name is Uzo. I run this channel, the Invest IQ, where we make money easy, particularly for immigrants. And hey, by all means, everybody, you guys are welcome. All right, so let's get right into it. And hey, smash that like button and make sure you're following as well if you're seeing me for the first time. Okay, so a lot of people always ask me, hey Uzo, how are you able to make 100% returns? I'm just gonna tell you some of the things you need to learn here in Canada in order to make these great returns. Number one is you need to understand the financial landscape. Yeah, this Canada is different from where you're coming from, just like where you're coming from is different from Canada. So when you settle down, you need to then understand what is different in terms of the financial landscape here in Canada. Hey, the earlier you understand that, the better for you, because there are some account types here, some tax strategies that are here in Canada that you might not find in your home country. All right. And the number two thing you need to do is to understand the account types, still on the same matter. Now in Canada, you have different types of accounts. You have the savings account, you have checking accounts, and of course, you have what they call the registered accounts. Hey, are you guys taking notes? All right, so the registered account includes things like the tax-free savings account, where if you buy any assets inside of it, you don't pay tax at all. Yeah, you don't pay tax. Now, the next account that is also vitally important is the registered retirement savings plan, right? So that's an account where the Canadian government provided it such that if you keep investing during your working days, when you retire, you get to pay low tax. Now, the other important account is the first home savings account. This is particularly account for folks that want to buy new homes for the first time, right? So this is where you pack the money. You pack the money for your new home. So moving on, step 3, you need to open the right accounts. Now that you know the landscape, you know the account types, so it is not every account that is relevant for you. Especially as a new immigrant, you might not need all the accounts at that time. Perhaps you need a checking account, which in my opinion is the most important account for a new immigrant. And then as time goes on, you might have a savings account just to put maybe your emergency funds and things like that. And then when that is done, the next account you want to look at is the tax-free savings account. Perhaps you want to keep the registered retirement savings account for later, all right? The next thing is to assign your investment. When you start making money, now you're making some money, right? You want to put the money in an investment that will yield great returns. Now, knowing the right account to assign it is very important. So you might assign it to the tax-free savings account, or maybe you have stocks or ETFs. You can put it in your registered retirement savings plan. In another video, we're probably going to talk about these types of investments and how I was able to structure them. Okay. All right, guys, the next thing you want to do is to understand the investment vehicles, right? So there are different investment vehicles. These are investments that will take your money to the promised land. All right, so you have the ETF. It's exchange traded funds. It's a basket of companies that are low cost. Particularly if you're a low risk investor, you want to make sure that you buy ETFs instead of buying individual stocks, right? You also have mutual funds as another investment vehicle. These are particularly, offered by commercial banks. They have higher fees, but they also give you around 6% thereabouts in returns. But an average ETF might give you around 10%. Hey guys, the rates are not guaranteed. It depends on market performance, but generally ETFs tend to do better than mutual funds, right, on the average. All right, so now you're looking at individual stocks. This is where you buy great companies that you like, maybe McDonald's or Apple or Microsoft, right? So these might give you better returns, but then again, know that the higher the return, the higher the risk. So you want to do your research and learn how to play around stocks, okay? So for most investors, they put their ETFs inside their tax-free savings account as a starting point. Okay, my people, I hope you're finding value in this video. I enjoy sharing this video with you guys. I'm going to continue with the next 5 things that I did that made me have 100% returns in my tax-free savings account. Right, this year I'm working towards having much more returns in my tax-free savings account. It takes a lot of attention. I must tell you, it's not easy. I'm a little bit of experienced investor as well, so that also helps. But hey, you can do it as well. There's no provided you understand the metrics involved, you can also do it. I do not do day trading. I just do long-term investing basically. All right, let's get straight into the slide and look at the next 5 things that you need to know as you prepare to come to Canada, or even as you're in Canada already. Come right with me. Okay, so the next thing you need to do is to understand stocks and why they matter. As I tell you, if you're in North America, I feel like everybody needs to know how stocks work. Investing in stocks are basically having ownership in great companies. If you like a company like McDonald's, like Starbucks, you buy a share of the company. The difference here is that if you buy shares or if you buy stocks, you become a shareholder in the company. If the company grows, you make money. If the company doesn't grow as much, you lose money, right? So that's where it's a little bit of risky when you start playing around stocks. So it requires great knowledge, right? But if you don't want to play in that circle, there's also something called the S&P 500, where, for instance, in the US, you have the top 500 US large companies. On the average, they've returned about 10%. So there are some ETFs you can actually buy that covers the S&P 500. For instance, you have the VOO, you have the VTI, right? Those are ETFs that cover the S&P 500, the top 500 companies in the US. So in that case, you're not taking a gamble on a single stock. You're actually betting on 500 stocks. So you can agree with me that that is less risky, right? Even in Canada as well, there's also an index that measures the Canadian market. I think there are about 230 companies in Canada in that index. I think the name of that index is XIC. Guys, you can check it out, okay? Okay, the next thing you want to pay attention to is to pay the least tax legally possible. Very, very important. It is good to pay your tax. That's how the government is able to give us road, steady electricity and things like that. But hey, you want to make sure you pay the least tax possible and keep the rest, invest the rest for your family, right? Now let's move on to how to avoid lifestyle inflation. Now guys, this for me is one of the most important points on this slide. And this is one of the things I did that really changed things for me. What is lifestyle inflation? You know how you come in and then you want to buy a big house, right? Everybody can buy a home in Canada, they say. And then you buy a big house. In Canada, for every space that your house occupies, you pay for it. Remember, you pay property tax, you pay for maintenance, you pay your monthly bills as well. There's a lot of things to pay for, and the bigger your apartment, the more you pay, right? So it's good to buy a house, but don't buy spaces you don't need. For instance, you're a family of 4 and you buy a 5-bedroom duplex, and you tell yourself, when my mother-in-law comes, she's going to stay in that room. If your mother-in-law comes and spends a week with you, you would have paid for that room for the entire 1 year. That is money you would have invested. Or perhaps you have a big car, you have just a family of 3 and you're buying an SUV, large SUV. That is lifestyle inflation. That is spending more than what you actually need. Because remember, you're going to buy gas for that big SUV, right? So the bottom line here is that for lifestyle inflation, anytime your income increases, you want to make sure that your investment increase as well, instead of just your lifestyle, instead of traveling. Remember, traveling is not an investment. So make sure you put that money to good use, put it in good investment, and then let it compound. Put it in good investment, learn how to identify the great investment, and then let it compound, okay? Now, okay, so I'm back here to check in on you guys. So this video is actually sponsored by Cloud Relief. Cloud Relief is a neck pillow, right, for travelers. You know, if you look in here, you'll see it's a very comfortable neck pillow with massage, so you can wear it, you can put it on, and then it has a massage feature while you're traveling. You can visit the link up here and place your order. I'm going to put it in the description as well. For full disclosure, this is actually my family business, actually my wife's business. So hey guys, if you find value in this right here, hey, come support us, come support us. All right, people, we're going to talk about black tax. Yeah, black tax. So this is basically sending money to your family back home. It is very, very important to do that. But hey, make sure you're settled before you send money back home. I'll just leave it at that. Just do the right thing by supporting your family, but make sure you're settled, okay? The next thing you want to do is to diversify your investments. Vitally important. I can't say this enough. Because the more you diversify your investments across different assets, I give you an example. If you have $100,000 to invest, you can put 20,000 in real estate. You can put 30,000 in stocks. You can put 20,000 in bonds. You can put another bit in whatever other type of investment that you like, or maybe use 20,000 to start a business. That is diversification right there. It is vitally important to do that as well. Okay, my people. Are you finding this video useful? I'd like you to put the comments below. Tell me what you want to see. Tell me what you want to learn about Canada, particularly about investing. I cover investing in Canada. We're going to get back to the slide. And in the last bit of this presentation, I'm going to show you the account types here in Canada at a glance. All right, my people. These are the 4 pillars of registered accounts. You have the tax-free savings accounts. I call them the 4 ninjas. All right, so the tax-free savings account basically talks about is an account whereby you can buy investments or buy assets like stocks, bonds, ETFs, and whatever growth comes out of those investments, you don't pay tax. Guys, you would have been hearing me say tax. It is very important here in Canada. If you check out the tax rate in Canada, it is quite high compared to our contemporaries. So anything that makes you pay less tax is good for you. And the government has actually provided these 4 pillars to help you manage taxes better. I feel like kudos to the Canadian government for doing that. I feel like that's a smart thing they did. But most people are not taking advantage of them. So basically, if you have a tax-free savings account, you can invest up to $7,000 without paying tax. All right. Now, the next account type here is registered retirement savings account. I've previously touched on this. It is tax deferred. In other words, you pay tax in future. And again, it's also tax deductible. In other words, if you put any contribution inside this account type, it reduces your taxable income for that year, right? So, of course, you also have the first home savings account. What it means is that if you're trying to buy a home for the first time, if you're a first-time home buyer, like we call it, you can actually put $8,000 in this account. And you can do that for the next 5 years. In other words, you can have about $40,000 in this account. So if you want to buy a home, you withdraw the $40,000 and use it as down payment for your house purchase. Okay. I like it because it combines the features of TFSA as well as the features of RSP in the sense that it is tax deductible and any growth you have on that account is tax-free, provided that the reason for withdrawal is for the purpose of buying a home. So moving on to this guy over here. So this is a non-registered account. Disadvantage is that it doesn't have a tax shelter. In other words, any growth you have here is actually taxable. But the room is unlimited. That's the advantage. And of course, capital gain tax applies. So capital gains tax is the tax you pay on the gains. So currently, we have the capital gains is much more favorable than the traditional tax on other types of investment, in the sense that you only pay tax on 50% of your returns based on your tax bracket. But generally, people, newcomers start from tax-free savings accounts, and then when they get a good job, generally when you start earning around $80,000 per annum, you want to get a registered retirement savings plan, and then of course you want to buy a home. Okay. So there you have a quick chart to show you why this is important. If you have outside your TFSA, if you invest $10,000 for the next 20 years at 8%, you're going to get about $35,000, and then after tax you have about to 27,000, right? And then of course, if you put the same in your tax-free savings account, you get to keep around 46,000, because you get to keep 46,000 because you pay no tax literally. All right, so I added this slide to show you how lifestyle inflation works. Perhaps in your year 1 in Canada, you earn about $60,000 and you invest 10% of that, which is $6,000. And then your lifestyle expenses and everything takes $54,000, right? Now, year 2, you earn $80,000, and of course, you still invest the same $6,000. You see, you're increasing lifestyle but reducing your investments. Now, the right approach is to invest the same percentage of every raise. So if your income increases from 60 to 80,000, you increase your investment by the same percentage. And that's how you grow financially. Instead of just looking good on the outside, you have a good car, you have a good house, but hey, you're not growing. Be careful, because sometimes when you come from overseas, you can get carried away with the life, with trying to live a better life here in Canada, and then you end up being in the same circle, right? All right, everyone, it's been real. If you want to learn more about this, I'd like you to download my free beginner's guide. The link is in the description below. You can also book a session with me. I have a program called the Invest IQ 5-step session for personal, portfolio plan. If you want to learn deeply how to set up your portfolio and how I was able to make that 100% return, book a session so that we'll have one-on-one and I personally explain that to you. If you found value in this video, I'm building this channel and I would like you to be part of that structure. Hit the subscribe button, guys. It costs you nothing to hit the subscribe button. Alright, guys, do me a favor, hit the subscribe button so that whenever I post more videos about investing, you will get the alert. Okay, my people, so it's been real. I'll see you when I see you. And hey, don't forget to smash the like button and subscribe as well. Take care, keep investing. Ciao, ciao.